Good afternoon. My name is Mark Rittmeyer. I'm a CPA, independent CPA, and I've worked with the Big Four and implemented large systems around the world. Basically, been in every major city in the world implementing large systems. So glad to be here today.
Hello, my name's David Piesse. I'm the insurance advisor of Guardtime, and I'm here to answer questions on data security and mitigation.
David, as I've taken the journey and spent 25 years putting in these systems around the world, we've collected a lot of data. We've collected, very, very, very valuable data in the forms of financial records, books of records for financial institutions, insurance companies. What happens when we have a data breach? What exactly does that mean to you?
The data breach to me is the tampering, or someone has stolen, entered the corporate environment and stolen or tampered with data. That is a very serious effect on the corporation, as data is a valuable asset, and it can in fact affect the solvency or reputation of that company if not dealt with.
So I've as a consultant in the industry, I've worked in the enterprise risk area. What kinds of risk do we have when there's a data breach?
The risk is operational risk. It's a failure of of internal systems and IT systems to detect that breach.
Okay, and do we have do you see reputational risk as an issue?
Reputational risk is a massive issue here for many corporations, but also financial risk, as they can be fined if that data breach goes unnoticed or unnotified.
Okay, so we see that there's reputational risk, and do you have any examples of that in today's market that you've seen? I mean, I've seen a few. It's been an interesting last 6 months. Can you give me one, and I'll give you one, and let's talk about that.
Yeah, well, I think we've seen a lot of data breaches. It's in the media, and the way it's handled. I mean, banks are a great risk here. Recently, we saw a bank have 45,000 credit cards replicated. The credit limit increased to 50,000 from 5,000. 45,000 times 45 amount of dollars was drawn out. It was put back to $5,000, and then that company had to tell all the customers that all this data had been stolen, their private details were stolen. That led to a class action litigation and a serious reputational risk for the bank.
Is it country specific, or is it unit specific, or corporate specific, or is it cross globally? I mean, when I put the systems in globally, when we put them in across country, we move data across networks. Is it really just someone? I guess I want to say infiltrating the network in one localized area.
No, I think this is what we call in the insurance industry an equal opportunity risk. It affects everybody and all stakeholders, and it is very difficult to tell if a cyber attack on a corporation or a bank or a government is in fact an attack on that particular organization or the start of a cyber attack on the country.
Okay, so some of the people that I work with are in forensics. I don't specifically do forensics, but that I've talked to them about this. And how do you know, or what would the insurance industry say about what's been taken or altered? Do they have to know what it was before? I mean, in terms of data, do we have to have a before image or an after image? What exactly does the insurance industry need to know in terms of forensics?
Well, I think previous to KSI, there were multiple types of ways to try and identify data breach. We're now, with the importance of this particular subject, the use of KSI, which is what we're here to talk about, means that we can sign data at source. That data, that signature that we put on the data, which is a tag or a piece of metadata, data about data, lives with that data for its whole life cycle, whether that life cycle be 100 years from a life insurance policy, or whether it be 20 years for a general insurance policy. But this is the way of tagging the data and seeing if it's been tampered with wherever it goes.
Okay, but is it technically possible to do this kind of thing where you can just tag and I mean, you talked about it earlier when earlier today. You talked about fingerprinting a piece of data. I mean, if it's in, and as we put these systems in, how does that, like, how would that help me? What are my benefits when I do that? What do I feel? How do I get that? How do I get benefits from putting in this fingerprint technology?
The benefit is going to be that, first of all, this is verified purely by mathematics. There are no physical keys, hence the name keyless signature infrastructure. That means that in the cloud, for example, keys can't be hacked because there are no physical keys. There are no third parties involved here. So we don't have to rely on the IT department, or we don't have to rely on certificate authorizations in order to protect our data. So the lack of keys and the lack of third party means that we've eliminated two of the major problems of the past.
Okay, so these keys that we don't have keys any longer. We fingerprint the data. We can track it wherever it goes, and we understand if someone basically commits a cyber kind of crime and comes internally to our networks. Now, again, we have firewalls around the organization. Our on-prem versus our cloud-based applications. Our on-prem are behind the firewall. Why is that an issue? I mean, why from an insurance perspective, why is that an issue? We're protected. They're not getting through our firewall, but yet we have examples of constant penetration in these areas. Why is that happening? What's going on? Do you know?
Well, the current solutions, which we call fence solutions, don't actually address the integrity of the data. They address availability and confidentiality of the data. So thereby, we are looking at as a fence. Now, we're talking about data solution, right? Data protection, data integrity of this. And the question is, for the fence providers, from the customers, is who protects us, i.e. the customers, from the protector? The answer is that we do. We protect the customer from the fence protectors by making it compliant so that we remove the need for keys and the need for people in the equation. So we are the protector, and we're certainly not trying to replace fence systems. We're complementary to that environment.
Okay, so that's interesting, because innovation and of course the security and the firewalls, and part of that when we place new systems in service, I see an increasing numbers of systems in a faster pace replacing them. It used to be a system would be 10, 15 years, 20 years. I see systems or pieces of applications being rapidly replaced in the cloud at a high rate of speed. And for example, a lifespan of an onboarding HR or a human capital portfolio manager being in the cloud and available globally to treat your company as your entire workforce as one workforce, right? Available across the world to be deployed at any time. How can we protect that? I mean, that's what we're talking about, right? We're going to try to protect that data. Before we used to host it internally. Now, and protect it with a ring fence, right? Where do you see this going? Do you see it continuing to grow in terms of more applications in the cloud, faster deployments? And if so, how much insurance do I need, and how does that apply?
I think that it's a very good question, Mark, and I think we've looked at the growth now of new devices. What are the drivers here, right? The drivers are mobility, right? The internet,
Absolutely.
The cloud, machine to machine. Like we know in the insurance industry, we're now charging premiums in car insurance for what the car is telling us and the GPS is telling us. So this is generating a lot of extra data that needs to be protected. The cloud is beneficial to all industries because it removes, the need for in-house IT. This saves a lot of carbon emissions. It saves a lot of paper. There are a lot of very good reasons why we should move to the cloud. What has been stopping industries like insurance moving to the cloud mainstream has been the regulatory objection to the security and the privacy of using the cloud.
Right. So the risks of moving to the cloud for the insurance industry is that reputational data, the loss of data, right? If we keep it in-house, keep it inside of our perimeter, essentially on-site or on-prem. We don't have those risks of going out, but we can get now potentially the same services for a lot lower cost if we go to the cloud, right? But our insurance industries want to save money. We want to save money, charge lower premiums, right? I mean, that's generally what we're trying to do, save the shareholders or save the customers premium dollars. And by doing that, we lower our costs to maintain policies, pay claims, et cetera. We want to move to the cloud, right, to take advantage of all this new process or business process re-engineering, right? Can we do it now with Guardtime?
Yes, I think the the need here is to make sure that data doesn't leave the enterprise. So, but we can leave the enterprise with this tag key, right? But the data stays in the enterprise. So we can show regulators that we are actually protecting the data and remove that barrier that the regulators see of the cloud being somewhere where our data flies away, leaves the enterprise, goes across border, maybe exists somewhere miles away. We can prove using KSI that the data is still within the enterprise and satisfy the regulator in this concern.
Okay. I think I understand that. I think one of the little bit of history, right? I think when I first entered the ERP market space and started implementing my first systems, the risk of failure was not getting the implementation in on time, and some of the implementations went for years, right? And now we've gotten that down, so we don't miss. We have a 9-month or a 6-month implementation, and in fact, if we use the cloud, we go live within a month, within 4 weeks, 6 weeks, 8 weeks. So we have constantly upcoming systems, right? Constantly systems coming online. What happens to in the old days, 20 years ago, if we didn't come up with an ERP system or we put one in and it failed and we had to take it back down? Usually the management or the CIO and all the related parties in IT have a problem. What happens today with this cyber liability? What's happened to the people where they lost the credit card data or they've lost assets within the organization? What happens to those people? I mean, in the IT side of things, if not the finance side of things, what happens to them?
So I think we've established that the IT industry is not the first place to go to in the case of a data breach to solve the problem. The IT department should be doing business processing engineering audits, security audits, and data continuity audits, so that we can move, in the event of a serious event, we can move from one location to another without having to do any reprogramming or coding. So that is the IT business of continuity. If we look at the KSI world, where we've removed, we've removed keys and we've moved people from the process, here we're looking at how quickly can we notify through a security plan only put in by the customers. How quickly can we notify of a data breach the right people?
Yeah, but what happens to those people? I mean, what's the end result? I mean, if this happens under my watch, what happens to me?
Yeah, well, it's
do I disappear? I mean, am I the bad guy because I didn't put in the right security levels? What can I do today to make sure that I can keep my job? Because in the past, these ERP, these CIOs, these IT managers, the people that's recommended putting in these ERP systems that went live and then I lost my business continuity for 3 months. This doesn't happen today because the ERP systems are, through several life cycles and we can guarantee uptime. But now we have this cybersecurity breach going on. What happens to the people who didn't protect the assets? Do I lose my job?
Well, I obviously, if the corporation has lost reputation, they've lost revenue, their share price has dropped, and other issues that occur for this data breach, there will be a loss of jobs in that. So yes, so there is a great need to make sure that this is mitigated against and does not happen. Right?
Okay.
So yes, so I think yes, they will.
So that's my concern, right? Yeah. If I'm the CIO who's putting in, is worried about this data integrity, this data, the data in doubt kind of thing, right? I will lose my job if most likely there will be some penalty to my reputation if the organization.
So the smart CIO will actually start to look at data as intangible, and how does he protect intangible assets of that company? So an intangible asset would be data. An intangible asset is, the new IP, if you like, of organizations. And so therefore, when you look at the risk management budget and you look at the insurance budget, and if 85% of your company is intangibles, you should direct 85% of your budgets to those intangibles. And a KSI will protect those intangibles.
Okay, so how do we get this intangible value of the data, right? I'm a CPA, so I know IFRS standards, which is assets or intangible assets are covered under IAS 38. We can internally generate them, and we can add value to the data. And does this signature encryption help ensure that the data has value?
Yes, it enables the data to be scored, and I'll just quickly cover that. I realise that IAS 38 has not gone so far as saying the accountants can allow data to be on the balance sheet as an asset right now, but I think we're heading in that direction. By putting if the data's come from, say, a social media, it may not be it might not be the data integrity we need. We need to clean that data, we need to score that data, and data ranging agencies are growing up in the USA that are right now actually scoring data based on their integrity, and that enables an accounting process to give it value.
So now we're talking about big data, and I like that. So the sum of the parts is larger, right? So if you add the one piece of social media data, let's say it's Facebook data, along with our enterprise generated data, and then you add an externally third-party public piece of data, that adds up to 3, but yet together they're equal to 5.
Well, big data is, to me, is they're repositories in the cloud of large volumes of data that come from multiple sources. That is enterprise data, transactions, vendor data, could be sensor data, public data. And this data is being now utilized by social media companies in order to track customers, in order to get new customers. In the insurance industry, we're not using this big data to the full extent. And we need to start doing that so we compete with the social networks. With that way, we need to protect our big data with KSI and make sure that that data is scored and cleaned so that it's valuable to the enterprise.
Okay, so I'm having a little bit of a hard time understanding that. So what is real data? What is real data? Can you answer that?
Real data to me is data that has been cleaned, non-tampered, tamper-free, evident, can be tamper-free, evident in court, can be used as an asset in the organization. So that to me is real data.
So from a finance standpoint, from a CPA standpoint, is it the original book of record? Is that where the data originated from, or where is the book of record? Is it the application? I mean, from a technical standpoint, where is this data? If we're combining social data with our enterprise data, with our public record data, and do we have to know where it all came from, and then what do we do with it?
Well, we established earlier with KSI that we actually sign the data for its whole life. So we need to sign the data close to its point of origin as possible to make sure that it's the original, hasn't been tampered with. So we need to look at, sometimes the data is signed in an executable, sometimes it's signed as a document, sometimes it's signed as an electronic transaction, and many more. So
it's a point of it's actually the point of transaction, or the point at which we acquire the data, whether it be keyed in, whether we take it from a social media source, and then we have responsibility for that data.
That's right, and ownership of the data is not just IT department, it's all the stakeholders, and the ownership of the data in the cloud is a very, very key question.
David, how many companies and what industries are using KSI as a benchmark?
We started off with the two industries that have the most exposure, that being defense industry and telcos, telecommunications.
Okay, so what do they, and what countries are you actually working in?
Well, because America has the most laws and litigious society, which is quite important here. We started in America, and now we're moving around the globe.
Okay, and what about Asia, where we're both residents of?
Well, Asia has more of a reputational risk driver at the moment because it doesn't have mandatory laws. It's putting in data protection laws, but it hasn't got mandatory data breach laws. So for Asia, we are starting to look at how we can protect the reputation of the companies by using KSI.
Okay. And do you see acceleration past the North American countries or the North American countries? Do you see acceleration for Asia as an emerging market or as a growth market?
Yes.
You see them accelerating and then extending beyond the need for the current data protection levels in the U.S.?
Yes, very much so. I see them, especially as the multinational companies will bring the laws that they've subjected to in America cross-border into other regions. So cross-border forensics, which is probably of interest to you, is where we can look at where did the breach originate, who owned the data, where was the customer, even though if the breach occurred in another country, we would have to look at that cross-border breach.
Yeah, I can't, I mean, we get these questions. We have data privacy, which is a sovereign issue in just about every country. But we have a need to know from a corporate perspective, and we put in these ERP systems so the data essentially is available at each country through one centralized system, and we can look at that data. Is that breaching public privacy rules as far as insurance is concerned?
Well, public privacy rules are localized. They're different in different places. So you need to talk to this is where the legal representatives come in for this and handle these kind of privacy environments, including subrogation and other types of actions that could result from a data breach.
So I think in the privacy perspective, it's a big area here, right? It's so if I was to take data from one country and it's got this KSI signature on it, it's got a fingerprint, and I take it out, and would it have impact being found in another country?
I think the legal the legal profession is still looking at this in a very big way. Every time I go to conferences and every time I talk to people, there is a legal panel. Now in America, they are specializing in this cross-border data breach, and they are now starting to look at the implications of KSI for the legal profession.
Let's to wrap this up. Where's it all headed? Where are we expecting it to be in 5 years?
Well, hopefully in 5 years' time, there are global mandatory data breach laws protecting all movement of data. This is the way the EU and Asia are going to do it, to move towards. So we want a global. What America's done now, we want to see globally.
So you see a standard across the globe, which then the local countries or the sovereign countries can take advantage of, and then validate what they originate.
Yes, KSI is already a standard in certain standards in America and in the EU, and we expect that to also happen in Asia Pacific and emerging markets.
So in the insurance market, let's just take a look at the customer perspective, right? In life insurance, so we originate with a birth certificate, we terminate with a death certificate. And if we're born in one country and we live in another country, can we validate that birth certificate is actually a valid certificate? Would each country be able to validate that with this KSI technology?
Well, the data in the cloud knows no boundaries, so we could use KSI to create a boundary. Not a physical fence, but we could create a boundary to look at the life of that data.
So this offers an opportunity to every sovereign country.
Absolutely.
So basically, your citizens of your sovereign country travel, and they need to prove or provide evidence that this birth certificate, not a piece of paper, but your electronic certificate, is valid. You then can offer a service back in your sovereign country for a price.
Yes.
And validate.
This is because the KSI tag that we discussed, that is signed on the data, follows the data. And
so not only it could be a tremendous opportunity here for anyone who adopts it to actually potentially provide a beneficial service to the community.
That's right. Correct.
That's very good. what can we do as a company to put it in as fast as possible?
Well, I think we at Guardtime we are training up integrators and telecommunication companies to understand how this can be implemented on an enterprise-wide scale. We can link that enterprise-wide scale training that we did with the integrators. We can introduce them into the broker risk assessment process, and then we can warranty that KSI should go into corporations in order to make sure the insurance protection is effective.
So if I mean, just to wrap it up, my data is protected. You're saving me potential cost of fraud. So my policy is going to be a lower cost policy for my insurance industry. It's going to be a lower cost policy. I'll get a better benefit as a customer. It's a great thing across the board, and it offers opportunities to sovereign countries.
And lastly, I think to add to this, that we can add non-repudiation to the subrogation process.
Okay, subrogation. What do you? Who's responsible, right? That's basically who's responsible in the case of a claim. And you're talking about P&C claims?
Subrogation is claiming back claim costs from a third party, right? So when there's a breach, who is responsible? This is an IT environment where people outsource data, and outsourcing data is outsourced to other people. So what the insurance industry is most worried about, say for example, if Amazon was the outsourcer, Amazon's probably done very good risk assessment. They outsource to another third party, who outsource to another. We're very concerned about the risk assessment down the value chain. So if there is a data breach, KSI can tell any interested party who was at fault here and who wasn't at fault. So it's non-repudiation, it's fairly black and white, so you can tell. So this outsourcing chain is going to help the subrogation process and recover costs, and also stop CIOs being fired because they weren't actually responsible for the breach.
Yeah, and potentially the CEOs as well. I mean,
Yes.
The CIO is just a person who's on the same level and a little bit further down the board
right.
seat.
That's right.
So it affects everyone in the organization. What are the shareholders? What is their interest in KSI and data integrity?
I think the shareholders, what the shareholders don't want is the share price to drop. They don't want reputational risk, and they don't want loss of customers. So by using KSI, we can give the shareholders peace of mind that we are looking after those particular subjects.
So kind of a Guardtime inside kind of thing, right?
Yeah, that would be one way of putting it.
Yeah. Okay, well, thanks very much for your time.
Right, pleasure. Thank you very much, Mark.
Thank you.